Specifically, we're going to talk about Mastering Probability newsletter. This is a fantastic newsletter. Steve is very thorough with everything going on in the market. These things really help me when days like this are occurring, right? Because I'm getting to kind of check my concepts against the concepts of people who've been trading for longer than I've probably been conscious as a human. Additionally, what I like about Steve is he has just very unique analyses, which I think kind of broaden the horizons for a lot of people and how they approach investing. So really strongly recommend checking out Mastering Probability newsletter. If it is your first time, you can do this risk-free. I know sometimes people can be a little hesitant to buy things online, but not to worry. We have a 30-day money-back guarantee on all of our newsletters, so you can check this out risk-free. If for whatever reason it doesn't work out for you, you can get your money back. I'm betting that it is going to work out for you. Steve Rhodes, how are you doing?
Doing great. These are wonderful days to actually be in the markets and explain to folks what it is that I'm seeing out there. So my apology for my voice. We'll do the best that we can out here. But, a day where you've got about a 10% move in the semis and a 4% move in the NASDAQ 100, those would seem like good days to be on, because questions that might enter somebody's mind is this the beginning of the end? Right. So I want to try to answer that story if I can. And the first place I'd like to start with, Jacob, is this chart right here. This is a monthly time frame chart for most of the major indices. When I say major indices, you've got the Dow at the top, the DAX is number 2, the FTSE in the UK is number 3, the Nikkei is number 4, the Shanghai, and then I've got the Hang Seng. So all of them are in there, and the white vertical lines identify major tops in the market. We've got the 2000 top, the 2007 top, and the 2020 COVID crash. Because they're so scrunched together, they don't show, you can see the tops. You'd see them even more if I didn't have them so scrunched together that way. But we know those were significant tops. The point that this chart makes is that when major tops form, it does so in all major indices. So that was the first point that I wanted to get across for everybody. The second point is when markets make major tops, what they will do is they will is there a problem out here? No. What they will do is they will form the topping patterns that I teach each day for the daily, the weekly, and the monthly time frame. So the way that we know we've got a major top in the market, for example, this is the major top for the Dow going back to 2007. And on a daily time frame, we had what I refer to as the Rhodes Momentum Indicator top. The same thing for the weekly chart. The monthly chart had a TD9 count and a Rhodes Momentum Indicator top. Those clearly led to bear markets out there. We take a look at the DAX. So we just go internationally out here, because many times this is where I see people fail the most, is we only think in terms of ourselves. A little bit selfish out there to do that. Right. But when it comes to markets, we can't just think of ourselves. That first chart that I shared with you, where major market tops will form in all major indices at the same time, is really important. And then it's also important to understand, how do those tops get formed? Is it just happenstance? No, there's actual topping patterns. So the DAX back in 2007, when it topped, it had a Rhodes Momentum Indicator top for its daily, its weekly, and a TD9 count topping pattern for the monthly time frame. So we fast forward to today. What did the DAX do today? The DAX, the only topping pattern that the DAX has is a daily TD9 count top that went ahead and confirmed today. But we can see here that price came back and pulled back and tested a key level of support. And that's that green line that's called the oscillator and change line. So support is held. That means that so far the daily signal is neutral. The weekly chart doesn't even have a topping pattern in sight, nor does the monthly chart. This suggests that these two, both the weekly and monthly chart in the DAX, want to rally. And with the daily time frame holding that 21,114 level, support is held. Now, maybe overnight you start to see price trade below 21,114, so that's a number somebody should write down on their pad of paper out there. If so, the DAX will head lower. Its next key level of support is down at 2290 or 2726. Out there, those would be levels. If we fast forward and take a look at the Dow today, the Dow is it's a form bar 8 today, and it might form a TD9 count top tomorrow. When I take a look at the weekly chart and the monthly chart, we do have tops that are out there. So we're seeing obviously weakness here in the U.S. market, not necessarily in the international market. What's that mean? It means, okay, so we have a choppy market here in the U.S. We might see a further pullback. In the case of the Dow cash index, maybe we move back to the 43,665 level as an example. But we don't have this conglomerate of topping signals in U.S. and international stocks. If we look at the S&P 500, so we get a feel for what's going on in the U.S., no topping signal in place today for its daily time frame. Nothing for the weekly time frame. Last week we closed at a new all-time high. We closed above all prior highs that were out there, let alone closes. And the same thing is true for the monthly time frame. No monthly top. So there is no major top that's in place here, at least as far as the charts that I see. And I'm saying this with clarity. If I take a look, what's the message of the equal weighted charts? So you've got the QQEW is the equal weight for the Qs, RSP is the equal weight for the S&P 500, EDOW the equal weight for the Dow. If we take a look at what their signals say, the RSP, so the equal weight for the S&P, its TD9 count is going to go away today, unless price somehow closes miraculously above 182.13. That pattern goes away. The topping, so what that means is that the topping pattern goes away. Doesn't exist. Typically, the equal-weighted ETFs will go ahead and point the way. If we take a look at what's going on inside the sectors, inside the S&P 500, here's what we're going to see. The XLK, which is the weakest of the sectors today inside the S&P 500, is testing support. It's testing its TD9 count. It's testing its market profile buy zone out here between 226 and 227. The XLV is rallying. It's testing its TD9 count breakdown resistance level. If it closes above that, tells us about a further rally. The XLF is targeting 51.49. That's a TD9 count breakdown level. It doesn't show up here on my chart, unfortunately. And the XLC, no topping pattern at all. It's only the XLK that's in trouble. But let's look at the other sectors. The XLE is just pulling back. It's trading with inside its profile. Maybe it's going to pull back to 89.19. In the case of the XLY, XLY, it's trading below its profile, so that suggests, it's the XLY is trading above its profile, so this is a bullish signal. The industrial sector has got a TD9 count top. Odds favor it pulls back to 137. The XLP is trading above its TD9 count breakdown area, 79.72. That's bullish. What I'm showing here is that we're not seeing bearish sectors even inside the S&P 500. The issue is with regard to the semis. Yeah. You didn't need me to tell you that. And the semis may pull back even further. But if you look at the monthly chart out here, look at this. This has been consolidating sideways for 6 months.
Yep.
We're just seeing a little bit of a blip so far today. Maybe it's going to turn into something more than that. But really, if we take a look at just the monthly chart, that's all you almost need to look at. That's a very upper panel, left-hand chart. Look at the bodies of those candles out there. It has been nothing but a sideways consolidation inside the semis for a 6-month period of time. Here is the Dow trading in major currencies. It closed at a new all-time high today in Australian dollars. This is not how major tops in the market get made. Right. Here is the Dow is trading above the day after the presidential election. This takes us back to the last 3 elections. You got to trade below that in order to really get bearish out there. So that's just simply what I'm seeing inside the marketplace.
Fantastic. Yeah, Steve.
Lastly, one last thing. This is the daily chart for the 4 daily equity future contracts. You can see that profile support is held on all of them. We're not getting any signals, at least not yet, at least not on January 27th, that this is the beginning of the end.
Steve, thank you so much. Great analysis as always. We hope you feel better. We'll see you Monday for sure, okay?